So if you go reverse, so you can clearly understand. But they have not given the cash price, so we have come from third installment. For the rest of years, you will have only depreciation because in first year you have already purchased that asset. Rest of the year you have to go on calculating the depreciation. They have just told that they have bought a motor car, but they have not told what is the worth of that motor car. In the sense, we don't know the cash price of the motor car. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the 6th session of Unit 2 of the subject Financial Accounting 1, and this is for first sem BCom student. So your Unit 2 is all about accounting for hire purchase system. So already we have discussed few of the concept. We had also solved few of the problems. So let us quickly recall what we have discussed in a previous session. So in a previous session, we had solved a problem relating to ledger accounts in the books of hire seller. I think you are familiar with all type of problems now. That is journal entries in the books of hire purchaser and ledger accounts in the books of hire purchaser. In the same way, journal entries in the books of hire seller and how to prepare ledger accounts in the books of hire seller. So we had solved a problem on ledger accounts in the books of hire seller. So if you know the journal entry, it is very easy to post into ledger account. So make sure that, and these journal entries are repetitive in nature. So make sure that you learn the journal entry and a very easy problem also. In today's session, we shall continue with a new problem. So I have told you in the previous session, we are going to solve a problem on hire purchase system where cash price of the asset is not given. Now let us see how we are going to solve this problem. Now, go through the problem here. Mr. Kavan bought a motor car. Now, who is a hire purchaser? Mr. Kavan. So, he is a hire purchaser, bought a motor car from General Motors. Now, General Motors is what? Is a hire seller on 1/1/2007, and make sure that this date is very important. So, in each and every problem in the installment as well as in hire purchase, date is very important. So, on 1/1/2007 on the hire purchase system, the payment was made as follows. Here, they have just told that they have bought a motor car, but they have not told what is the worth of that motor car. In the sense, we don't know the cash price of the motor car. The payment was made as follows. Rupees 4,000 on delivery. That is nothing but was down payment. So here they have made a down payment of rupees 4,000 and rupees 7,600 in the end of first year. In the end of first year, they have paid how much? 7,600. Next, rupees 6,000 at the end of second year. So first year they have paid rupees 7,600. Next year they have paid rupees 6,000. Next third year they have paid rupees 5,500 at the end of third year. So here they have paid different amount at the end of first year, second year as well as third year, and they also given the down payment, but they have not given the cash price. Interest 10% per annum is included in 3 installments. So this interest is included in the 3 installment they have directly told us. Kavan charged depreciation on motor car at 20% per annum. Here depreciation is how much? 20%. Interest is how much? 10%. On the diminishing balance. So here we are following written down value method or diminishing balance method in order to calculate the depreciation. So depreciation has to be calculated at 20% on the diminishing balance method or written down value method. Prepare necessary ledger in the books of Kavan and show the interest calculation. So they have asked us to prepare ledger accounts in the books of Kavan. Now who is Kavan? Kavan is a hire purchaser, and show the interest calculation. Now here you have to see that cash price is not given. So they have not given the cash price. Clear? Then how we are going to solve this problem? Now go through the working note here. Let's start from the third installment. Clear? Here they have given first installment, second installment as well as third installment, and they have directly told that these installment includes interest, and they have given the down payment also. Using this information, we shall calculate the cash price. Now, this is for calculation of cash price of the asset. So, we shall calculate the cash price. Now, go through the first installment. We shall start with downwards. That is, we shall go through the third installment. We shall start with downwards. We shall continue with third installment. Now, what is the third installment? 5,500. Right, this third installment 5,500 less interest, because they have told it is inclusive of interest. Right, so less interest 5,500. What is the percentage of interest? 10%. So 5,500 into, now you are not dividing it by 100. Now what they have told, this installment includes interest also. Right? So this installment includes interest also. Now what is installment? Installment is equal to principal plus interest. Right? Now, installment should include principal plus interest. Now, what they have told, this installment includes interest also. So, principal, let's assume that principal is 100 and interest is how much? 10%. Right? So, interest is how much? 10%. Then, installment is how much? 110. Clear? So, they have told this installment includes interest also. So, principal plus interest, let's assume principal is 100 and interest is 10. They have given in the question. So, installment is how much? 110. Now, we want interest, right? So, we want interest. So, how to calculate interest? Now, third year installment is how much? 5,500, right? So, this is 5,500. is equal to 110. So, 5,500 is equal to 110 and we want interest. So, interest is how much? 10%. So, how to calculate? 5,500 into 10 divide by 110. So, how to calculate? 5,500 cross multiply into 10 divide by 110. Clear? Yes. So, when you multiply 5,500 into 10 divided by 110, so you'll get 500. So, this is why we are dividing it with 110, because it is inclusive of interest. So, what is the formula? Installment is equal to principal plus interest. Now, let us assume we don't know what is the principal, we know the installment, right? So, as I told, it is inclusive of interest. So, let us assume principal is equal to 100 and interest is 10. So, installment is how much? 110. So, they have given third installment is 5,500. It's nothing but 110, right? 5,500 is 110. We want, particularly we want interest. So, for 10, that is for 10, how much we have to calculate. So, 5,500 into 10 divided by 110. So, interest is how much? 500. So, third installment less interest. So, how much? We'll get 5,000. Now, add second installment. So, what is second installment? That is 6,000. So, add 6,000. So, we'll get how much? 11,000. Clear? Now, less interest. So, in the same way, for 110, it's how much? 11,000. Then for 10, how much? So, 11,000 into 10 divide by 110. So, 11,000 into 10 divided by 110 will get 1,000. So, less these two, 11,000 minus 1,000. So, we'll get 10,000. So, we are coming from downwards, that is from third installment, next second installment, next first installment. Next, add first installment. So, how much is first installment? They have given 7,600. So, we want cash price, right? So, whatever we have to deduct, whatever we have to add, so we have to make that, then we'll get the ultimate cash price. So first installment is 7,600. So add this first installment. So the total is 17,600 less interest. So calculate upon this amount 17,600 into 10 divided by 110. So I'll get 1,600. So when you deduct, so I'll get a 16,000. For this 16,000, so even they have made the down payment. Down payment is also given. How much? 4,000. That is rupees 4,000 on delivery. So add this down payment 16,000 plus 4,000. So we'll get 20,000. So what is this 20,000? This is cash price of the asset. It's nothing but if you go reverse. So cash price is 20,000 less down payment. So the amount payable is how much? 16,000. So among this amount 16,000, 1,600 is first year interest and this installment is how much? 17,600. Next second year installment, how much? 7,600. Next you will get the 10,000 to be paid, right? So 10,000 to be paid. So interest you have to pay 1,000. So the total amount to be paid is how much? 11,000. So if you go reverse, so you can clearly understand, but they have not given the cash price, so we have come from third installment. So what we have recorded, so they have given third installment amount 5,500 less interest, so we have to calculate it for 110. Suppose the rate of interest is 20%, then 5,500 into 10 divided by 120. So we have to deduct interest, then we'll get an amount, add second installment, next less interest, that is second year interest, then add third installment less third year interest, then we'll get the amount payable. For that add down payment, we'll get the cash price of the asset. So this is how we are going to calculate if the cash price of the asset is not given. Next we shall calculate depreciation, because we are going to calculate or we are going to prepare ledger accounts in the books of hire purchaser. Now hire purchaser is having an asset, so we have to calculate depreciation. What is the cash price of motor car? We have calculated 20%, and they have told we have to calculate in written down value method or diminishing value method. So cash price of motor car is 20,000 less first year depreciation. So what is the depreciation? That is how much they have given percentage, that is 20%. So how to calculate? That is first year depreciation. So the cash price of the car in the first year is 20,000 into 20 divided by 100. So we'll get 4,000. So 20,000 minus 4,000, that is 16,000. Clear? Next for second year depreciation, 16,000 into 20 divided by 100. So we'll get 3,200. Why we are calculating on this reduced amount? Because we are going to calculate depreciation on written down value method or diminishing value method. For third year depreciation, so if you deduct this, you will get 12,800 into 20 divided by 100. So we will get 2,560. So since they have asked us to calculate depreciation only for 3 years, so we are done with this. So third year depreciation is how much? 2,560. Now we shall directly move on to the ledger accounts. Now we shall start preparing ledger accounts in the books of hire purchaser. So my dear students, so what are the journal entry that comes in the books of hire purchaser? So the first one is for receiving the asset, that is for purchasing the asset, and the second one is for down payment, third one is for interest due, and the fourth one is for installment paid, and the fifth one is for charging depreciation, and the sixth one is transfer of interest and depreciation to profit and loss account. So if you are familiar with this journal entry, it is easy to post them to ledger accounts. So as I told, so we are going to prepare ledger accounts in the books of hire purchaser. So who is a hire purchaser here? That is Mr. Kavan. So in the books of hire purchaser, we have to prepare hire seller's account. Now who is the hire seller? General Motors. So we shall prepare General Motors account. Now if you come to the first year, so what are the transactions that has to be recorded first? So the first one is for purchase of asset. So what is the entry? So when did we purchase the asset? So the asset is being purchased on 1/1/2007. So what is the entry for purchasing of asset? That is asset account data to hire seller account. So here asset is motor car and the hire seller is General Motors. So 1/1/2007 buy motor car account. Now what is the cash price of motor car? So we have already calculated, that is 20,000. So write this amount 20,000. Now we have purchased the asset. Next, what the purchaser will do? He will make the down payment. That is, here in the question itself, they have given the down payment. So when down payment is made to the hired seller, so what is the entry? Hired seller account data to bank account. So it is on the date of purchase 1/1/2007 to bank account. So what is the down payment? So down payment is how much? 4,000. So make the down payment. And the third entry is for interest due. So what is the entry? Interest account data to hire seller account. That is end of that particular financial year. So end of financial year is 31/12/2007 by interest account. So what is the interest for first year? That is interest for first year is how much? 1,600. So write that amount 1,600. So after interest due, which is the fourth entry for installment paid. So what is the entry? Hired seller account data to bank account. Here hired seller is General Motors. So when the payment is made, so we'll write to bank account. That is end of the financial year 31/12/07 to bank account. So what is the first installment paid? That is 7,600. So write that amount. Now, after that, what is the next entry for depreciation charged? So here we are not going to charge the depreciation. So in the books of hire purchaser, we have to charge the depreciation, but hire seller is not linked with that depreciation. So no need to record entry in the books or in the hired seller account. That is no depreciation, as well as last entry is for transferring depreciation as well as interest to profit and loss account. Here also it will not come. Now as usual, you have to balance both the side. When you add debit side, you got 21,600, whereas coming to the credit side, you got a balancing figure of how much? 10,000. So this 10,000 has to be carried down for the next year. So write 31/12/07 to balance carried down. So how much? 10,000. That is balancing figure. Next year is 2008. So on 1/1/08 by balance brought down. So whatever the amount you have carried down in the previous year, that amount has to be brought down on the beginning of next year. So beginning of next year is 1/1/2008 by balance brought down how much? 10,000. So whatever the amount you have carried down, here 10,000 you have carried down, same amount has to be brought down at the beginning of next year. Next, as usual, for the second year, you don't have the entry for asset purchase as well as down payment because you have already done in the first year, right? For second year, your entry starts from interest due. So what is the entry? Interest account data to hire seller account, that is end of 2008. 31/12/08 by interest account. So what is the interest for second year? So interest for second year is how much? That is 1,000. So record that 1,000. Record 1,000 interest. So after interest due, which is the next entry for installment paid. So what is the entry? Hired seller account data to bank account. So that is on 31/12/08 to bank account. So what is the second installment? So they have given in the question itself. Second installment is 6,000. So write this 6,000. Now as usual, balance both the side. So in the credit side it's 11,000, whereas coming to the debit side you'll get a balancing figure of 5,000. So this amount has to be carried down. Carried down for the next year because they have told the remaining amount is made in 3 installments. So we have to prepare ledger accounts for 3 years. So at the end of 2008, that is 31/12/08, to balance carried down how much? 5,000. So when you total, you'll get 11,000. Now moving on to the last year. So whatever the amount you have carried down in the previous year, bring down that amount first. That is 1/1/09 by balance brought down how much you have carried down? 5,000. Bring down that balance 5,000. Next, as usual, except for first year, rest of the year you don't have asset purchase as well as down payment. So your entry starts from interest due. So here also third year is interest due. What is the entry? Interest account data to hired seller account. So here hired seller is General Motors. So at the end of 2009, by interest account. What is third year interest? So we have already calculated. How much? 500. So write that 500. Next, installment paid. So what is the entry? Higher seller account data to bank account, that is at the end of the year 31st 12/09. So to bank account. So what is the installment paid in the third year? So they have given in the question itself 5,500. So make the payment. Now add both your debit side and credit side, it is 5,500. Hope you are clear with how we are going to prepare ledger accounts in the books of hire purchaser. So the first account to be prepared is hire seller's account. Next, go to asset account. That is, here the asset is what? Motor car. So here we are going to prepare ledger accounts in the books of hire purchaser, that is Mr. Kavan. Under that we shall prepare asset account. So here the asset is motor car. So in the first year, here the hire purchaser have purchased the asset. Right? So for that, what is the entry? Motor car account data to hire seller account. So how we are going to record? So who is the hire seller here? Who is the hire seller? That is General Motors. So to, this is not Hindu Motors, this is to General Motors. That is, it's nothing but hire seller. So what is the entry when asset is purchased? So your first entry in the first year is what? Purchasing of the asset. So what is entry? Asset account data to hired seller account. That is on purchased on 1/1/2007 to General Motors account. So what is the cash price of the asset? We have already calculated, right? So the cash price of the asset is 20,000. Write that 20,000. So this is cash price. So after purchasing the asset, you will make the down payment. So there is no asset required. Next, you will interest due. There is no asset. Next, charging depreciation. So for asset, you have to charge the depreciation because asset is in the hands of hire purchaser, right? So what is the entry for charging depreciation? Depreciation account data to asset account. So how do you record? That is end of the financial year by depreciation account. How much? So we have to see the table. So we have calculated the depreciation. So first year depreciation is how much? 4,000. So record that depreciation. 4,000. Next, as usual, balance both the side. So it's 20,000 in the debit side, whereas coming to the credit side, it's only 4,000. Write 20,000 both the side minus 4,000. You'll get a balancing figure of 16,000. So that 16,000 has to be carried down for the next year. That is end of the financial year, 31st 12/07. By balance carried down. How much? 16,000. So in your asset account, first year, you will have two entries, that is for purchasing of asset as well as charging depreciation. For the rest of years, you will have only depreciation because in first year you have already purchased that asset. Rest of the year you have to go on calculating the depreciation. Now in the second year, so whatever the amount you have carried down in the previous year, that is end of the previous year, that is 31st 12/07, you have to bring down that balance. 1,108 to balance brought down how much? 16,000. Whatever the amount you have carried down here, you have to brought down that amount. 16,000. Next, charge depreciation. So 31st 12/08, that is end of that particular year, that is 2008, by depreciation account. So what is the entry for depreciation charge? Depreciation account data to asset account. Here asset is what? Motor car. So by depreciation, so what is second year depreciation? That is 3,200. So write that 3,200. Now balance both the side. Your debit side is 16,000, whereas coming to the credit side, you are having only 3,200. Write 16,000 both the side minus 3,200. You'll get a balancing figure of 12,800. And this amount has to be carried down for the next year. Right? 31st 12/08 by balance carried down. Now coming to the last year, that is 1,109. To balance brought down. Whatever the amount you have carried down in the previous year, you have to bring down that balance. That is 12,800. Next, as usual, charge the depreciation. So what is the entry? Depreciation account data to asset account. Right? 31st 12/09 by depreciation account. What is third year depreciation? So third year depreciation is how much? 2,560. So write that amount. Next, as usual, 31st-12/09 by balance carried down. So we'll get a balancing figure of 10,240. So the total is 12,800 and you got a balancing figure of 10,240. So that amount has to be brought down for the next year. So how to write? That is, so they have asked us to prepare depreciation account only for the 3 years. So if it is for 4th year, then that balance continues and we'll calculate the depreciation for 4th year also. Now we have to bring down that balance, that is 1,110 to balance brought down. So what is the amount? You have to brought down, it is 10,240. This is for next year. Now we will wind up with this motor car account. So you have to bring down the balance and we shall wind up because asked us to calculate ledger accounts only for the 3 years. Now come to interest account. So your third entry is for interest due, right? So what was the entry? Interest account data to hire seller account. After that, that interest has to be transferred to profit and loss account. That is the last entry, right? So coming to the first year. So this interest due as well as transfer to profit and loss account takes place at the end of the financial year. So what is the entry? Interest account data to hire seller account. Now at the end of 2007. So your first year is what? 2007. End of 2007 is 31st-12/07 to General Motors account. Who is a higher seller here? General Motors. To General Motors account. So what is first year interest? Yes, first year interest is how much? That is 1,600. So this is first year interest. Write that amount. 1,600. Now this 1,600 has to be transferred to profit and loss account at the end of financial year. So 31st-12/07 by profit and loss account 1,600. So the total of debit and credit side will be equal. Now coming to the next year. In the same way 31st-12/08 to General Motors account. What is your second year interest? So second year interest is how much? That is 1,000. So write this 1,000 and transfer this 1,000 to profit and loss account. That is end of 2008 by profit and loss account 1,000. So your total and of debit and credit side will be equal. In the same way for third year 31st-12/09 to General Motors account, that is to hired sellers account. What is third year interest? So third year interest is how much? 500. So write that 500. 500 and transfer this 500 to profit and loss account. So your total of debit side will be equal to total of credit side. Now we shall prepare depreciation account. So since asset is there in the hands of hire purchaser, so regularly year after year you have to calculate the depreciation for the asset. Now what is the entry for charging the depreciation? Depreciation account data to asset account. Now what is the asset here? Motor car. So this depreciation is charged at the end of the financial year and after charging the depreciation it has to be transferred to profit and loss account. So the total of debit side will be equal to total of credit side. Now come to the first year. End of first year is 31st-12/07. So depreciation account data to motor car. So to motor car account. So how much is depreciation? First year depreciation. So first year depreciation is 4,000. So first year depreciation is how much? 4,000. So write that 4,000. So 4,000. Now transfer that 4,000 to profit and loss account. 31st-12/07 by profit and loss account 4,000. Now balance both the side. So here also it's not 3,40,000. It should be 4,000. Yes. In the same way come to the second year 31st-12/08 to motor car account. What is second year depreciation? Second year depreciation is 3,200. Transfer this 3,200 to motor car account and transfer that depreciation to profit and loss account. So 31st-12/08 by profit and loss account 3,200. Now the total of debit and credit side is equal. In the same way for the last year. So depreciation account data to motor car account. So what is third year depreciation? So third year depreciation is how much? 2,560. So record that 2560. Transfer that depreciation to profit and loss account 31st/12/07/09 by profit and loss account 2560. Now calculate both the side, you'll get the same. That is the amount of depreciation. So after charging the depreciation, so that amount has to be transferred to profit and loss account. So this is how we are going to prepare the depreciation account. So in my next session, I am going to solve a problem on hire purchase system where cash price of the asset is not given. So we shall continue with one more problem so that you can clearly understand if the cash price of the asset is not given, then how we are going to prepare the accounts. So what we have to do, we have to come with last installment to first installment in order to calculate the cash price. And if it is in the books of hire purchaser, then we have to calculate the depreciation also. So if you are familiar with the journal entries, it's very easy to post that journal entries to ledger accounts. My dear students, hope you all understood the problem. See you all in my next session. Till then, take care. Thank you.